there's a bunch of IPOs that are coming down the pike. If you've watched the news or haven't been under a rock, you've probably heard about some of them.
SpaceX taking a very big step towards what's almost certain to be the biggest IPO ever.
The interesting things isn't really about those IPOs. What's interesting is some changes that are happening to some of the indexes.
So when you think about what the Nasdaq 100 is supposed to represent, it is going to be the 100 largest non-financial companies on Nasdaq. It's known as really the innovation economy. So previously, prior to these rule changes, it could take up to a year to get to that index.
Hi, I'm Patricia Lloyd with Ardent Wealth Management. I just came out of our investment meeting with my team, and there's some interesting things coming down the pike that we are addressing in our portfolios. And I wanted to come on today and give you kind of a quick overview of what's happening and what it might mean to you in your portfolio as well. Some of our concerns in our portfolios are that we're going to have risk increasing in some holdings, as well as risk to the overall markets that will be coming up due to the changes that are happening with indexes. So one of the big changes or things that you're probably hearing about out in the markets are these big IPOs that are coming out. SpaceX is the first that's going to issue. There's a lot of other changes that are happening where it comes to what gets included in an index. Now, I wanted to cover for a second, we have different trading platforms. We have the New York Stock Exchange. We've got the Nasdaq. And so a lot of times those trading platforms are confused with actual indexes that include certain holdings in them. And so, for example, the Nasdaq is an overall composite of, many different holdings that are traded on that platform. It's a computerized platform that you can list and trade your stock on. The Nasdaq 100, however, is an index that includes 100 of the holdings that are out there. And so you have to be careful when you're talking about a trading platform versus an index. So I just wanted to point that out as we're kind of going through this conversation. As these IPOs come out, they're going to be listed on one of these trading platforms to be able to be traded. However, they're not necessarily always included in an index. And so as we're going through this, we'll talk about some of the changes as to when, why, and how things will be included in the various indexes. Now let's go back to history, okay? In the past, they used to wait for IPOs to be out and listed and trading for a while before they included them in certain indexes. The S&P 500 is a good example of one. You have to be out there listed and trading for 12 months before you'll even be considered to be in the S&P 500. And they have a lot of other criteria that goes along with who they include in the S&P 500 and who they do not. However, just know there was a lot longer time frame back in history as to how long you had to be out there trading in the markets. And this was done on purpose because when you have an IPO issue, they're guessing at a price, right? Let's face it, they assign a price to it. They say there's a certain value to the company and what have you. So let's look back at Uber. And Uber IPO'd on May 10th of 2019 at $45 a share. Now, after Uber's IPO, they were not included in very many indexes for quite a long time. They did get included in the Russell 1000 in June of 2019, at the end of June, but that was because there was a annual reconstitution of that index, and it would then include anything that was kind of out there trading at that point in time that met their criteria. And Uber happened to do that. And so that was one of the indexes that did pick up Uber rather quickly after the IPO. But the vast majority of indexes did not include Uber for a very long period of time. As a matter of fact, they did not get included in the S&P 500 until the end of 2023. It was December 18th of 23. And the reason that these IPOs used to have to go through this seasoning period, as we call it, would be because there's a lot of risk with it. There's a lot of ups and downs. If you look at the Uber chart early on, you can see the stock was all over the place. It went as low as $27 a share at the end of 2019, and then now it's sitting around $60 a share currently. And so the whole idea was to let these IPOs kind of come out, settle a little bit in the trading, settle on valuation really before they started to get included in a lot of the indexes. So what's changing today? There's some fast tracking of IPO inclusions, and this comes about for large IPOs. Well, we have several large IPOs that are kind of coming out right now. SpaceX will be the first that issues this Friday. Then we've got Anthropic and OpenAI coming right behind that. Now, what's interesting about these companies that are coming out is that a lot of people think long run they're going to be great investments, and likely they will be, but they're definitely going to have some bumps in the road along the way. And so, but what's changing about the inclusion in indexes, and this is certain indexes, not all, but some indexes are going to be including these IPOs in their index funds within 5, 10, or 15 days. Rather than the much longer time frame. It used to be 90, 180 or more days before they would even be looked at to be included in any kind of index. So some of the indexes that are changing to this 5, 10, or 15 day inclusion period are the Nasdaq 100, the Russell, the CRSP, the MSCI, the FTSE Global Indexes, and the Dow and Jones and S&P total index funds. And so not the S&P 500, but the S&P total index funds. Those are two different things. So I just want to make sure we delineated the line there. The S&P 500 had talked about making these changes as well, but they decided to stay the course with what they had. And so stuff has to be out trading on the markets for 12 months before it's considered to be part of the S&P 500. Okay, so let's talk about SpaceX a little bit. SpaceX is coming out this Friday, June 12th, with an IPO price of $135 a share. They have a target valuation of $1.77 trillion. That's trillion with a T. And there's currently in 2025, it had revenues of $18.67 billion, which were up 33% from the prior year. However, it had a net loss of $4.94 billion. And so when you look at an IPO that's rather large, like SpaceX coming out, with running a loss on the company, where's that valuation coming from? The 1.77 trillion valuation coming from? So likely you will see some volatility on SpaceX as it IPOs. But the biggest issue now that we're potentially going to have is that SpaceX will rather quickly, in that 5, 10, or 15 day period, start to be included in some passive indexes like the Nasdaq 100 or the total market funds and things like that I just talked about shortly ago. So now SpaceX is an interesting one because it really is inclusive of 3 different businesses. You have Starlink, you have the rocket business, and you have xAI, which is also known as Grok. So those 3 pieces kind of coming together. The only one that really has made any money is Starlink at this point. The other 2 have losses and eat up any kind of earnings that come out of Starlink right now. Okay, so what does this mean for you that this inclusion is going to happen faster into these indexes? Well, it definitely means that passive index funds, such as VTI, which is the Vanguard Total Market Fund, or QQQ, which is the Nasdaq 100 ETF, are going to rather quickly include these IPOs in the overall index. And likely that will cause some volatility in those indexes because, like I said, IPOs typically come out and have, length of period of time that have a lot of volatility in the pricing of that stock because, it's really kind of an unknown guess at valuations and things like that. So who's it going to affect? The biggest thing I think that people don't think about is 401ks, 403bs, all of your retirement type savings that you have. And a lot of times those are tied up with current companies that you're with, and you're limited on the funds that you have to choose from under those 401k plans. And those funds likely, if they've got any kind of exposure to any of these indexes we're talking about, which many of them likely do, will end up having exposure to these IPOs, which is an additional risk that maybe you didn't even understand that you were taking. No one really is talking about it too much. And, unfortunately, I don't think a lot of people have really heard that this risk is kind of being added on to your portfolio. It also affects retirees and pre-retirees because, if we have these large IPOs coming out, they're getting included in these indexes very quickly, likely to cause some volatility within those indexes. It doesn't mean that that won't affect the overall market. We have a lot of correlation between the S&P 500 and what happens in the Nasdaq. And so when you look at the overall indexes, it's likely that these additions of these funds into or these stock holdings, IPOs, into these indexes will definitely, cause some volatility. But I think the biggest thing that no one really mentions or talks about is that typically with an IPO and with SpaceX for sure, there's an insider early investor lockup period. So when an IPO goes public, basically they have a period where they can't trade on with their shares. And usually that period expires somewhere between 90 and 180 days after the IPO issuance. And so with this 5, 10, 15-day period to get these stocks included in these index funds, and then that period coming up 90 to 180 days later that these insiders are going to be able to start selling off some of their shares, who's likely to be stuck holding the bag when that price starts to drop? In the initial part of this IPO issuance, we're likely to see maybe a little bit of a run up where people do, they're excited about SpaceX. It's an exciting company. Of course, everybody's excited about it and wants to be a part of it. And so, it's likely to see an increase in that price. And that's great for those initial or early investors because they want that stock price to run up as high as they can have it run up right about the time that their lockout period expires so that they can then sell off some of their shares and cash in on the movement of that stock. But likely what will end up happening is people with 401ks and 403bs and retirees and pre-retirees will end up holding the bag for the drops that will then come, likely causing movements in the overall markets as well. So even if it's not in the S&P 500, it doesn't mean it won't affect the S&P 500. Like I said, there's correlation between the different markets. And so no matter kind of what you're holding, this is important to kind of understand what's going on about it. But even more important is to understand what you are holding, like what index is mirroring in the passive holdings that you have. Vanguard has a ton of holdings. VTI happens to be one of them. That's one of their total market holdings, and that holding definitely will include some of these IPOs in it. The QQQ, which is the Nasdaq-100 ETF, will definitely end up with some of the IPO holdings in it. And so understanding which indexes your funds mirror is super important at this point in time. So if you are out there and your investment advisor is not having conversations about this, or you really don't understand what you truly hold and how all these changes affect it, it might be time for a call with us so that you can get a better understanding of what you do have and what all this means to you.